Okay, guys. Thanks for taking the time to join us today. We are going to be talking about reviewing QuickBooks files today. So this is a service, obviously, that Fourlane offers. A lot of our clients have, this is their kickoff service with us, right? We really do two things here at Fourlane. We review people who are already in QuickBooks Enterprise, and then we also help convert people who are not in QuickBooks Enterprise yet and get them in. That's like our heaviest services that we offer. We'll spin off into a lot of things. But we're going to be talking about a file review today, so you have some tools to possibly look at these things yourself and dive on in. So just as a reminder, if I go too fast today or if you want to go check out any of our videos, you can go to our YouTube channel /Fourlane. I think there's like over 600 videos there now. I mean, I don't know. There's a crazy amount of videos up there in case you miss anything. There are some old-time videos. Topics are exactly the same, right? Reconciliations inside of QuickBooks haven't changed that much over the years. And then, of course, we do have our Facebook group for QuickBooks Enterprise. If you have questions you want to ask to peers, that's a great place to do that. As always, we have the QuickBooks support. If anybody is sick of calling Intuit support, you can utilize our support plans as well. All right, file review. So again, we call this a file review. It's not like it's not a fancy name. It's not some great marketing thing here, but basically what we try to do is timing-wise, right, with our customers, we like to tell them either quarterly or annually based on the level of staff that they have, right? A lot of people have maybe an accounting manager on staff. Maybe they have just an office manager who's running their books. Some people have CFOs, controllers, and full accounting staff. So depending on the number of people who are working in the file and doing, closes and file and stuff like that, those fewer people, then quarterly is better. Excuse me, gosh. The more people, usually we move more towards annually, right? Because you guys are just running, flowing, actually doing month-end close in a timely manner. And so this is just a second set of eyes. So what's the purpose? The purpose is a fresh set of eyes. So we can help correct deviations from our pathway that we've set up with our clients, right? The workflows that we've set up, the end goal, getting to those reports that we're trying to get to before they become actual problems, right? So sometimes just having somebody else take a glance, right, helps to get to that solution faster. I'm going to spend most of the time in product today, so that you're aware, but just to go over at a high level what's reviewed: file information, list count, preferences, transactions, balance sheet, P&L, trends, and then KPIs. That's what we're usually looking for when we're going through a full review. Now, there's a couple things that are different. So right in what we call a file review, right, and you guys can call it whatever you want internally, but in what we call a file review, we're looking at the data. We're looking at the system setup and the data. What we're not looking at in a file review is we're not looking at corruption, right? We're not looking at issues in the database. So that's a different thing that we do here at Fourlane. It's called a tech review, and so a little bit different. But in this case, what we're looking at is we're looking at the actual data, taking a second, stepping back from the day-to-day, stepping back from being immersed in, reconciling accounts or posting transactions or, arguing with somebody over reports, and saying, is this structurally sound? Does it make sense? Are we using it in an effective manner? Those are the kinds of things. And it is so fascinating how quickly people can get off track, right? You set things up one way, you set up a chart of accounts, and then somebody decides to throw in an extra chart of accounts. You set up a class list, somebody throws in an extra class, and then people start using it. I mean, it's very easy to get off track. So doing this review is really important. Okay, so let's dive in. So we're just going to be in my sample file today. So we can take a look at this. So the first thing that we always do when we're looking at a file review is we're always going to be focused on what is the setup. So I know everybody who's ever called support ever has used the F2 key inside of QuickBooks desktop. And so inside this F2 key, it gives us a lot of really helpful information. So it tells us, the license numbers that we're using. It tells us whether they're activated, how many user licenses there are. It gives us a ton of information inside this F2 screen. One of the things that I like to focus in on this is I like to focus in on this little section down over here, this little section over here in the list information. The condense information is also very important for us to focus on. And then we can do review, last, verify, and build. So first of all, file size is a really big deal. So why is that a big deal? Inside of QuickBooks, we don't have a limitation on file size. I have seen files that are 12 gigs. They are moving very slow. I know that if you call Intuit, they'll say there's a limitation of 1 gig sometimes, depending on the agent, you get 2 gigs. But I've seen way grossly beyond that in my time. So the file size does not have a limitation, okay? But just like with any database, if you let that file size grow too large, then it's going to run slower, right? If you don't have a plan for your Outlook PST file, which is, where all of your Outlook emails are held, if you don't have a plan for archiving those emails, eventually your Outlook file is going to run pretty slow. And this is the same thing with QuickBooks. Eventually it's going to run pretty slow. So we always should have a file size goal in mind, right? We always tell customers, as you're approaching 1 gig, we want to have a plan for what we're going to do before we hit 2 gigs, basically is what's our rule of thumb. Okay, so file size is a big deal. Total transactions is a big deal. How many total transactions are sitting in the system, right? So that's how many posted transactions. Then you have targets and links down here. So targets is how many lines on those transactions. So it kind of can tell you, right? If I have 1,000 transactions and I have 4,000 targets, then my average quantity of lines on a transaction is 4, right? How many links? So you have a sales order linked to an invoice. You have a received payment linked to a bill, those kinds of things. So really important information can be given from the screen. Then you have your database fragments down here. So database fragments is kind of a key into corruption. So if we see some crazy numbers in there, we'll probably be recommending doing a text scope so we can look at if there's corruption in the database. That's one of the key areas that tells us that there might be a problem. Okay. Coming over here, so we have condensed information. So that's always really important as well. The condensed information tells us if this file has ever been condensed in product. Always something we do not recommend. We do not recommend using in product condense feature, so we need to know if people have done it because, again, that's another trigger towards possible corruption in the file. List information. So it's pretty cool. They give us a little list count over here. This information is also a really big deal, right? So total number of accounts is an example. In our world, we recommend under 200 chart of accounts. Now, that number seems pretty low. If you're going into the QuickBooks Online space, 250 forces you to go up into QuickBooks Online Advanced. That number seems pretty low to a lot of people, and they think there's no way I can fit under 200. But the reason we like under 200 accounts is because your financials should be pretty simple. And if we need to build out details, right, we had another video that was another webinar we just did on list usage, right? If you're using your chart of accounts to give you details of things, we need to look at how that's set up. I have a client that originally when I started out with them, they had something like 2,500 accounts in their chart of accounts. And we took that down. We used their customer list for some of it because they weren't using a customer list. It's a nonprofit. We used their items list for some of it. We used their vendor list. We took their vendors off of their chart of accounts, right? Put them in the vendor list. And then we just created subledger reports, and we have them down to like 115 accounts now. That's all they need because they use subledger reports elsewhere. So this count of lists is really important. It'll also tell us if file size, right, kind of relates to file size. If you have customers, as an example, and you have 100,000 customers in the database, that's going to be something that we're going to be saying, hey, do you need all these customers, first of all? Because who actually can go through and look through 100,000 customers at any time? What's the purpose? What's the point? And that'll be a trigger for us to push back and say, what's the point of maintaining all these customers in your customer database? Coming down below here, right, you see vendors, other names, total items. That's a really big one. We recommend under 10,000 items. Same thing. If you are maintaining more than 10,000 items in a warehouse somewhere, I mean, it's not that QuickBooks can't handle it. QuickBooks can go grossly beyond that. It's just about, why are they there? That's what we're here to ask. This is what that second set of eyes is. What we'll hear a lot of times, we'll hear, well, every single time we buy this random item, we have to set it up as a new item. Well, that's not the process we would recommend, right? We would recommend having a part that's called, miscellaneous item, using description or another field to track that item, and then simplifying our items list. Because to manage 10,000 items, to review that list annually, quarterly, to update and maintain pricing, possibly commission structure around them, to update and maintain custom fields. I mean, that's a lot to maintain for 10,000 items, right? It's a lot to maintain. So that's where this review is really good, to kind of get someone asking those questions. Should we be doing this process the way we're doing it, or should we simplify? We are simplification champions over here. Classes, that's another big one. Sometimes we'll see class list, it's over 100. That's a lot of classes. So we have to say, like, why? What are we trying to get at? What's the goal with having all these classes? Or can we maybe, anyway, there's a lot of different things we can get into. Can we archive them at some point? Are we really using all of them? So you can see all the different list types down here. Now, some of these ones, like terms list, again, sometimes we'll see like 50 terms on the list. And yes, it could be possible that somebody needs 50 terms. Could be possible, but that's a lot to maintain. So we'll push hard on it. Anyway, you get the idea. So looking through this list information is super helpful every once in a while. One of the things that we also do is we do like a review for customers of 6 months ago versus today. So we'll say, okay, how many sales reps did we have in the system 6 months ago versus how many we have today? What is that growth? How many items do we have? How many customers do we have 6 months ago versus customers today? So we can see the growth and project out where we're going to be and make sure that that is a good projection for data that we actually need. So useful information. Okay, so after we come through here, oh, I'm sorry, I skipped one other area. Down below here, you do have the review, last, verify, and rebuild. This was added a couple years ago. And it'll tell you some information if the last verify failed or for any reason you can re-pull it back up through there. So we'll look through that as well. Okay, so the first thing is that database review. The next thing that we look at is we look at lists. So now we have the quantity of lists, right? We have the quantity. Now we look at the why. So there's a couple areas where you have lists in your file, right? So you have it under lists here. And we will literally go list by list. Because again, you never know what people have thrown in the system. And we had another video also on user permissions, right? So user permissions enterprise can help alleviate some of this. But if people have access to create new sales reps, maybe they're just going and throwing them in there. We need to look at what's happening. So we go through the list and we make sure that they seem correct, first of all. And then we also go through and make sure that they're not duplicative. So sometimes we'll see things like we'll see the items list and the customer job list and the sales rep list, right? All the same data in those 3 fields. So I'm going to push back on why. Is that really an effective use of data entry for us? So we really need that data in all these fields. Okay, so it's a lot of whys. Why are we doing it this way? Do we actually use this data? Okay, so if we're not, maybe we should, first of all, right? But if we are not using this data, it's not effective use of data, why are we putting it in the system? We want to pay attention to that. Okay, so we'll go through the list. As an example, some of the things that we'll see, right? We'll see things, start to pile up inside of the customer message list. It's so silly. But we will see people who just got hundreds of these customer messages in here. And so we just say, okay, can we simplify this? Can we simplify what these messages are? Because the purpose of this list is meant to be you don't have to type the same thing over and over and over again. But if somebody has to come in and filter through a list of 700, I don't think you can go that high, but customer messages, they're not going to use the list. So the purpose of it is not very effective. So we want to get to what's the purpose? The other one that is a big deal is the templates list. QuickBooks comes with a whole bunch of different preset templates. And then people can copy those and make their own. But if you give people a choice, right? So when I go into create an estimate as an example, if I have a choice of templates, that could be confusing for me. If I have a new employee that I bring in, they go, oh, which one of these am I supposed to use? I don't know. I'm going to guess. I'm just going to use that one. So we can simplify by making it that the ones that we're not using are inactive. So they only have a choice of one, right? Simplify. Okay, so we go through lists, right? Look through all the lists. That includes customer lists also, right? Customer lists are maintained in a different place. Customer, vendor, employees are maintained in a different place than this drop down up here. We look at the customer list. Does it seem, if somebody is not using customers and jobs, that's usually actually a red flag for us. Pretty much all of our customers use customers and jobs because it is a way to slice our data. It is a way for us to get better reporting out of what our system does. So if they're not using jobs, that's something we would be flagging. Figuring out if there is data that we could derive by setting up jobs and using that workflow. All right, the next one that we look through is we look through preferences. Now we do this, it sounds like, well, why don't you just do this one time, right? Why wouldn't we just do this once a year? Because you just never know who decides to go turn on what. We had one the other day that someone decided to go turn on FIFO in their file. They had the ability to. They went in, they turned on FIFO inventory tracking, it messed with the report. It's very easy to turn off. But it's just having a second set of eyes to peek through and actually look at what we have set up. Another one that's common that people make a mistake on is, what is our summary report basis? Accrual or cash? Right? If anyone who's in the enterprise space is being run on a cash basis, it's usually a flag for us because most businesses function on a modified accrual basis for running reports, right? For day-to-day functioning. For taxes, maybe cash basis, no problem. I understand that. But for day-to-day functioning, most people function on a modified accrual basis. And so if we come in here and we see that they're functioning on cash basis, it usually tells us that they're not using the system for reporting, actually. So we need to talk about it. So we go through both. Sometimes we'll go through the My Preferences with our users, right? So that you just know the things that QuickBooks decided to throw in at you, so you know that it's there, right? The fact that you can switch to colored icons at top if you don't like those dark colors. Just little things, right, that make life better sometimes. But then we go through the company preferences and we see what is on, off, and we compare last time to this time. Didn't have sales receipts on last time, have them turned on this time. What happened? What did we change? Why do we add a transaction type to our workflow? And is it necessary? Right? And sometimes the answer is yes, but having a second set of eyes is such a big deal. Okay. So we go through the preferences. I told you about a couple key ones in there, or not key ones, but a couple that are just, big flags in there. But reviewing those periodically is a really big deal. Somebody should be going in and reviewing those periodically. Next, we go into transactions, okay? So we look at what is the oldest transaction in the system. That's something that you always want to, let me close out of all these screens. You want to get to, right? When's the oldest posted transaction? We also look for future dated transactions. That happens quite frequently. We look and see which transaction types are being used. A lot of times what we'll see is we'll see estimates, sales orders, invoices, sales receipts, which I don't have turned on right now, all turned on in the system. But then we'll go into, estimates as an example, and we'll go previous, and we'll say, oh, wait a second, you guys haven't used estimates for 14 years. Why do we have those turned on? So maybe we can turn them off. So that's a one-time thing, right? Or if we don't see them turned on, we say, hey, this is the purpose of estimates in the system. Do you guys have any use for that? Is there any use for that yet? So education. Okay. They also have something in here. If you can't see it, it's a permissions thing called the income tracker. And the income tracker is really helpful because you can come in and see, this is showing me all open estimates, right? So if I have a whole bunch of open estimates from 27 years ago, then I need to come in here and fix them. All open sales orders, same thing. Come in and fix them. On estimates, you can batch mark them as inactive. On sales orders, they don't have a batch close, but we have a way to do that if you guys need to do that. Okay. They have the same thing on the vendor side as well, where you can go into the bill tracker and see open purchase orders. Right? Open purchase orders are actually really harmful in a system because they are going to tell inventory that it doesn't need to be ordered because it's already on a PO. So we would want to go in here and batch close out old POs for sure. So reviewing those transactions is a big deal. Making sure that what's in the system and open is valid. Because if it's not, right, what are we using? Like, how can we use this data? Other things that we'll look at when it comes to transactions is we will look at, we go through the entire list of transactions, honestly. And I know it sounds so silly. This is why it's great to have an outside firm do it too, or somebody who's separated from doing this work. It's because who would actually go in and look at a bill assembly? We don't do bill assemblies. No, we don't do any manufacturing. You can't turn this off. So this is here, and it is a healthy activity to go in and just look and see if anybody's done it. You would be stunned how many times clients tell me, we don't have inventory turned on at all. There's no inventory in our system. Well, in preferences, if you turn on purchase orders, you are turning on inventory, right? That's the preference. Enable purchase orders and inventory. They go hand in hand. And you would be surprised at how many times we come into this items list. We don't have inventory. We only have service. And they, surprise, we've got inventory. Sometimes the inventory is called miscellaneous parts, and it's just building up, building up. But that's where this second set of eyes is really helpful. Or somebody in the organization who's not doing the day-to-day, not doing the month-end close. Okay, so we'll go through the full transaction review. The other big one that we talk about transactions is journal entries, right? So what are we doing journal entries for? Journal entries are meant to be month-end close transactions, maybe moving allocations for, reclassifying if we need to. But journal entries should not be running your business. And if we come in and we see a lot of journal entries happening in a month, right? List of journal entries last month, last quarter, etc. If we see a whole bunch in here, it's going to be a red flag. It's going to be a red flag. Not saying that everybody should not function on journal entries, right? But even people who, we connect to a POS system. A lot of people want to post everything as a journal entry. We don't recommend doing it that way. We recommend doing it as a sales receipt. People who are posting things like their payroll, we don't recommend doing it as a journal entry. We recommend doing it as a $0 check for very specific reasons, right? Because A journal entry is actually very limited in the amount of data that you can put on here. There's not very many fields here. Whereas a check, right, or sales receipt, or all these other, there are a lot more fields that you can put in here. Class, customer, job, those are on the other ones. Also have a vendor, also have an account, also have an item. Can add in custom fields, really, because you can put custom fields on these. So it's just a lot more that you can get if you're using a different transaction type. And journal entries are one of those things for audit, right? You just want to we review all journal entries. And so if there's a ton of them happening all the time, then the real ones are harder to pull out. All right, next thing that we're going to review, I'm running out of time already, but okay, so this is more financial related. So we will go in, look at a balance sheet, and every account on the balance sheet should be reconciled. Okay, so it's either reconciled to a statement, like checking and savings. Petty cash account reconciled to something, maybe a drawer count, right? You guys count up how many quantity of ones, fives, tens, quarters, dimes you have periodically, and we reconcile to that count sheet. Accounts receivable would reconcile to a subledger document, right? So we would be running the AR aging summary report. Inventory reconciled to a subledger report, so inventory valuation report. Prepaids, which we have another video on reconciling balance sheet, but prepaid should be reconciled to zero. So we don't actually reconcile the accounts receivable account, right? We don't like go in and banking reconcile. But for the checking, saving, petty cash, we do. For prepaid, security deposits, suspense accounts, employee advances, whatever it is, they should be all reconciled to zero. So when we come in, we'll go into banking reconcile, and we will see when was the last time this account was reconciled. So this one's never been reconciled because it doesn't say so right here. When was the last time this one was reconciled? When was the last time your credit card was reconciled? When was the last time your employee advances was reconciled, right? We'll point out the ones that need to be reconciled. It's really all we're looking at in the balance sheet. Is there a report, a subledger documentation built in the file that substantiates that number? And if it should be reconciled, is it reconciled? Okay. And they all should be. Then the next part with a review is you want to look at trends. So you can look at trends in balance sheet, right? So maybe you're looking, if we're doing an annual review, we might want to look quarter over quarter to see, so I come from, this year, go back a year, total by quarter, and say, okay, so I'm looking at trends, over and unders, and you can add in to say, right, dollar change of previous period or percentage of row, percentage of column, probably percentage of column. So you can see all the different things that you want to easily spot. Now, I usually like to collapse. This is where that collapse feature is so important on these reports. But looking for, like, what happened here that we have negative cash, and just pulling out. It's amazing to me because even in our own organization, right, we have people who have been doing this for a long time. They do that month-end close every single month, and they just don't see that negative sign because it's a small amount, negative 7,000, who cares in the grand scheme of things, right? But somebody else's set of eyes can come in and say, what is this? Okay, so having review in there is really important. So we're looking at trends, balance sheet, and P&L trends. P&L trends is the biggest because we really shouldn't have that many variances unless, seasonally, we should know. Right? Our P&L should be pretty standard, or if it's not, then we should know what happened. There should be reasoning behind it. So we look at trends in P&L as well. That's another thing that is important to look at when you're doing review. One of the ones that I didn't mention yet too, but I really like focusing on is inventory valuation detail. So looking at for whatever period you're reviewing. So if it was like last year as an example. Well, that's not really very exciting because this is a sample file. So, but looking at that average cost movement, if you're seeing, right, so most of these not much movement. But here, how about this? $150 down to $27. That's kind of strange. So that should be a trigger for us to review what happened there. Coming down, right? So we're just looking for variances. There's material variances happening across your items. Might be something for investigate. We would expect that items over time, that the price of them should go down. Now, in today's market with supply chain and all the things, that's not normal right now. But we would expect over time for pricing to go down, right? Because we buy in bigger bulk, we're selling more, we've got better vendor relationships. I don't know, all those things. You expect to see stuff go down over time. So that's a good trend, right? Good trend, seeing the numbers go down. But if we're seeing them climb up, like up here, maybe that's something we need to look at, what's going on. Or maybe it's just normal business. Maybe it's just normal business. Okay. So trends is a really big deal. All right, and then the last thing that we want to look at in the file is always going in and doing some KPIs. So we have some pretty standard KPIs that we look at. You know, current ratio, what's the total current assets over total current liabilities? What's the customer average days to pay, right? So some normal KPIs that every business really pays attention to. Average sale frequently, right? So what's the ending invoice number minus the beginning invoice number divided by quantity of customers sold to in a period of time? So how often, right, are we selling to customers? Once in a year, 75 times in a year. Good numbers to know. And then watching these KPI over time, this is why we say annual, quarterly. It's really important to run these things not one time. One time is not an effective use of data, right? Just like running the P&L as of today, not effective for how am I doing as a company. It's good to look at it over time. So creating your KPI list and running it over time and comparing, are we improving? Are we not improving? Do we care if we're improving? Sometimes the answer is no. Are we headed in the direction we want to be? So those KPIs are a really big deal. Okay, we're over time. I'm sorry if you guys have any questions about this, but we get a lot of questions about what should I be looking at in my file? What is the file review? Because so many customers come back to us for it. If you guys have any interest in running that, please just go ahead and let us know. As always, our formula for success here at Fourlane is making sure that you have data to make decisions in your company. That's what we're always going to be focused on, as well as simplification. That's all I got for you guys. I went over a little bit, so if we have any questions, I will get to them after. I hope everybody has a wonderful day. Thanks, guys.